Today we're going to be talking about support and resistance, which is definitely one of the imperative topics that you have to understand in Forex. It's going to relate to every trading situation you can imagine. So might as well buckle down and get it right. So to start off, support and resistance, basically price barriers. It's going to change the direction of the current trend. So if the price is trending up, resistance may cause it to start to trend down. And if the price is trending down, support might cause the trend to turn up. So I have an illustration here that I'm sitting in front of. It shows a red candle moving down, approaching a line. That line is support. So support lays underneath the price and pushes it upwards. I have an illustration of a green candle moving up from the same line where the red candle stopped moving down. So the price stopped going down and started going up. Resistance, on the other hand, lives above the price. So I have an illustration of a green candle moving up towards a line. It's going to stop at that line, which is resistance. And then I have an illustration of a red candle moving down from the line where the green candle stopped. So resistance sits over top of the price and causes the price to return back down. It's a price barrier. So it basically bounces off the line. So for instance, if I were to draw two lines, and you can imagine the price in between these two lines bouncing up and down. When you were younger, depending on what generation you're from, you might be familiar with a game called Pong, where there are two handles on each side of the ball, and that ball basically bounces back and forth. So you can think of those two paddles as support and resistance. The price is going to dance around and travel in between these two key areas. And then it's going to react to those areas. So that data is consistently going to change. New areas of support and resistance are always going to create themselves. And of course, there are different levels of support and resistance. So you have major levels of support and resistance. You have intermediate levels. You have more insignificant levels. And those levels will present themselves on different time frames just based on how much data you're sitting in front of. So one of my favorite tools to monitor support and resistance with is called pivot points, which is a great way to illustrate how support and resistance works. So you'll have a chart, and what you'll do with pivot points is you're basically highlighting 7 areas of support and resistance around the current price. So if I draw 7 lines, the top 3 lines are going to be areas of resistance. The bottom 3 areas are going to be support. And the middle area is going to be what's called the pivot point. So when you're analyzing the trend and you're trying to figure out if the price is trending up or if it's trending down, these areas of support and resistance are going to help you determine what direction the price is moving in. And the pivot point, if you think about the word pivot, It just basically means that you are planning and turning. So that would be the area you would consider a new trend or a reversal area. So if the price is trending down, obviously we're going to be testing areas of support. And in my illustration here, I have the price right underneath the pivot point. So let's just say a downtrend has began. The price is moving down towards the first support area. We're going to call it S1. So once the price approaches an area of support or resistance, and this occasion is going to be support, you have three things that can take place. So we're going to have option A, option B, and option C. So the price is approaching the area of support and resistance. It's either going to be rejected by that area, turning around immediately. It can also do what I consider rubber band in that area, which basically means it's going to breach or cross that area of support or resistance. But that support or resistance is going to cause it to turn direction after it crosses that area. And then option C, final option, would be breakthrough. So if the price breaks through an area of support or resistance, think of that area as a wall. The harder you punch that wall, the better chance you have of actually puncturing it or breaking through it. So with that in mind, we need strong price action to break through these areas of support or resistance. So option C is going to be continuation of the trend. Option B is going to be reversal or retracement. And option A is going to be reversal or retracement. Hopefully you can read that handwriting if you're watching the video on YouTube. And if you're listening to me on podcast right now, make sure you go to ColemanTrading.com. Check out my YouTube channel and go to this video on support or resistance so you can look at the illustrations as well. But anyway, we got three options. Let's come back to the price movement here on the pivot points right underneath the pivot point area. So option A, the price would either turn around right before it hit that line for S1 or right at the line. That's going to be a rejection. So the price came down to S1 and moved back up towards the pivot point area. Option B, you have the price line extend itself through the support area, but not far, which you'll usually see a wick present itself as the price returns back above that line, which is what I like to call rubber band. So imagine the support being a rubber band, the price stretching it down a little bit and then bouncing back in the opposite direction, which is what I consider option B, a rubber band. Now option C, of course, would be the breakthrough. This is where you make your big money, because when you break through these areas, these significant areas of support and resistance, you usually get a lot of momentum, which means that the price is going to continue to move in that direction it's been moving in. So if you're in a downtrend, it's going to continue to drop. If you're in an uptrend, it's going to continue to rise. So here on option C, you see the price line approaching that support area and not pausing or stopping. The following candles will more than likely form below that support line as well, and then the price will start to make its way to the next area of support. Of course, if we're talking about an uptrend, this line would have been moving up towards the pivot point and then breaking through that area of resistance and finding upper levels of resistance to break, where option A, B, or C would happen. Now, one of my favorite tools I like to use to monitor these areas of support and resistance is called pivot points. Now, there are many different ways you can highlight these areas on the charts. You can simply look back in history and kind of draw a line over similar areas where candles have rejected. So where the tops of candles line up across the chart, or where the bottoms of candles line up across the chart. A lot of technical indicators are designed to highlight areas of support and resistance for you, like the Ichimoku cloud, which is one of my personal favorites. The shaded area in between the Seiku A and Seiku B barriers are called the cloud, and that entire area is highlighting a heavy area of support or resistance. Of course, if it's on top of the price, it's resistance, and if it's below the price, it's support. But what pivot points do is it's a mathematical equation based on the price history that's going to plot 7 areas of support and resistance for you. 3 of those areas are going to be resistance. 3 of those areas are going to be support. And then you're going to have 1 area in the middle called the pivot point. Now, if you're trying to decide if you're in an uptrend or a downtrend, or if a reversal is coming, the pivot point can be very helpful for you, because as you can imagine, if the price is in an uptrend and it crosses below that pivot point, we could be reversing to a downtrend, even if just in the short term. And vice versa, if we are in a uptrend and the price crosses below that pivot point, we could be turned into a downtrend. So the pivot point is normally where your trend decision will be made, and then those upper and lower levels are meant to be used as landmarks to let you know where the price is most likely headed to next. So right here in this illustration I have on the screen, if you're listening, just try to imagine the price is currently right below the pivot point, which would tell me that the price is more than likely going to trend down towards levels of support. Now, I have changed the colors of the lines so I can recognize them easier. You can set these yourself the same way. I leave my resistance lines all the same color, pivot point a separate color in the middle, and then the 3 support lines on the bottom a different color. And as you look at these candlesticks, you can literally see where these lines, I would say, reject, but to make it simpler, you can see where these candlesticks align themselves in the areas where these pivot point lines are. So you'll often see a group of candles all get very close to one of these lines before there is a big move. And that's kind of how you use these landmarks to let you know. Of course, you're going to have to do some analyzing on your own to figure out if you're in the up or down trend. But if you're trending up, you're looking for the next line above you. If you're trending down, you're looking for the next line below you. And you can either use this as a reference point to know when to cash out, or you can just kind of gauge the momentum of the current trend by how many of these levels and how often these levels are being broken. I hope that makes sense. Okay, guys, so real quick, we've been talking about support and resistance today. I'm gonna go ahead and show you guys how I will apply this to my decision making for the rest of the week. Share my screen. Okay, so here on TradingView, I intentionally left some old pivot points applied. These pivot points are from about a week and a half ago, the week previous to last week. This is where resistance, pivot, and support areas were. Now, I received some new pivot points at the beginning of last week, which actually tipped me off to be in the sell heavy, which is where these stats come from that you're looking at from the week. But basically, this is what I did. I have the 7 lines we referenced applied. R3, R2, R1 are areas of resistance to keep the price in check from going up. Pivot point is a decision area, and then S1, S2, S3, all areas of support meant to keep the price in check from going down. So what happened was, and I'm just going to go ahead and do this so you can see it. So R3 was updated from 135.78 to 134.18. R2, actually that's easier if I start from the bottom because these lines are going to start to get on top of each other. Since we're moving them down, we want to start at the bottom. If I were moving my lines up, I would start at the top. So S3, this was the big one. So S is really why I wanted to save it for last. Like some dramatic build up to it. But I noticed last week that S3 had changed from 130.02 and dropped all the way down to 127.004. Now that's about 200 pips, which does not happen often, especially not from one week to the next, because I've been monitoring these pivot points from Easy Indicators dashboard apps for quite a while now. If you're not familiar with the Easy Indicators dashboard app, make sure you check out the video I posted a few months back on this application. It is going to help you stay involved with what's going on in the chart, on the charts, when you can't be in front of the charts, because you will be notified when things change with your pair or whichever pairs you're monitoring, depending on how you set the app up. So when this support level dropped 200 pips, I said, whoa, something big's about to happen. And combining that with my knowledge on the Brexit and what's going on with the current Brexit situation, how this no deal scenario has been looming for months now, ever since the Prime Minister retired or stepped away from that position. So I learned about the Brexit 3 or 4 months ago. I've been keeping up with it, making sure I stay on top of my fundamental analysis, keeping track with all the high priority GBP folders. So me knowing that no deal was looming, with the fact that these pivot points dropped. Now you see S2 went from 131.71 all the way down to 128.58. 4. S1 dropped from 129.30, well, 132.31 to 129.39.8. Pivot point dropped from 133.45 to 130.978. And now we got the resistance areas. That's what I was saying earlier. These can get on top of each other if you're trying to move them too close into the same vicinity. So this is R1. It went from 134.05 down to 131.79. And I think this was on Sunday when this updated and these big changes happened. I already moved R3, so R2 went from 135.18 to 133.372. So this is what I was looking at last week before the big drop happened. And as you can see, the price dropped through all of that resistance, all of that support, because it's below the price. Dropped below. I don't think it ever even exceeded the old pivot point. So we were just testing levels of support since last week. The price started dropping towards S1 with momentum. You see none of these daily candles are green. So the sell structure went out the last 4 days in a row. There were new lows. If you come down to the H4 time frame, you can see a little bit more bouncing in between the levels. And you see where these candlesticks align with S1. That's where the price was struggling to break this area of support. Zoom in. You see this large red candle break S1 and go all the way down to S2 in that same 4-hour window before it retraced a little bit, rubber banded through S2, back above S2, and now we're basically stuck in between two levels of support. Still pretty strong sell structure. I got my price below the cloud. I have my conversion line below the baseline, even though both of these lines are pretty much horizontal right now, which tells me the price is consolidating. Parabolic drop below the price on the H4, which we don't want, but of course it's still above on the daily. So you piece together these time frames to make your decision on which way the price is trending or whether it's consolidating. And once you have your ideal which way the price is trending, it's all about which level are you headed to, which is why I use these pivot points. You can use these as target profits. You can use the line in the opposite direction as a stop loss if you wanted to, or right above that level, because of course if we were to break through S1 and the candle materialize on the other side of this line, we would be in danger of the price rising to the pivot point, which we would not want to happen if we were in a sell, depending on what kind of risk management I was using, what my threshold was for that maximum risk level. But hopefully this gives you guys a good idea of how support and resistance works and how you can use it to your advantage when you pair it with technical analysis and fundamental analysis. So I appreciate you guys' patience. I appreciate all the views, all the subscribers. I promise you guys, I have so much material coming, it doesn't make any sense. Schedule has been backed up. Got quite a few things I have my hands on to keep up with. And then of course, making sure I practice, study, and trade on a regular basis. But we got quite a few ideals in the pipeline coming to the channel for you guys. So stay tuned, practice your trading techniques every day. Make sure you learn something new every day. And until the next time, I wish you guys some strong profits and